for sure, there's more money in public markets, things have become somewhat more efficient. But I also see a short-term orientation that tells me that it's possible some pricing has actually become less efficient.
Have you ever dreamed of becoming an investor, but you just don't know where to start or what assets and strategies to use? What if I told you that you could learn how to invest directly from one of the greatest investors of all time? An investor with a track record so good that even Warren Buffett said he would trust him with his own money. Well, today is your lucky day. Seth Klarman, the legendary founder of investment firm Baupost Group, recently broke his 12-year silence to share his secrets to crush the market and make crazy returns. With average annual returns of over 20% for 30 years, Klarman's track record speaks for itself. In this video, we'll break down Klarman's rare interview where he reveals his approach to value investing in today's markets. Make sure you stick around to the end of this video to learn all the proven strategies for finding the best investment opportunities, as well as how to leverage your advantages as an individual investor, and ultimately supercharge your investment returns. Without further ado, let's dive right into this exclusive interview with the investment legend, Seth Klarman. He is notoriously private, so this glimpse into how he thinks is an incredibly rare treat. Klarman began his investment journey back in 1979, fresh out of Cornell University. Some people might argue that life was a lot easier then than it is now, as folks didn't have to deal with inflation and political or financial crisis like we have today. However, when asked this thought on whether or not the same opportunities that existed in his time are still present today in 2023, here's what Klarman had to say.
Now, if a kid came to me and said, where do you think I should potentially make my career, I would encourage them to look for the most inefficient pockets in the world. I also think it's important that they get mentored, that most people aren't ready to just jump right into this business right out of school. So I do think there are opportunities, but people should ask themselves, what are my interests? What kind of edge might I have? If you're from a different country, maybe you have great contacts in that country. Maybe you know a lot about the business culture in that country. And so my advice would be to go where you're naturally inclined and go where you think there may be interesting opportunity.
Now, that's a lot of info, and frankly, it's not what you hear every day. Klarman is stressing on two things here: the need for mentorship and the need for identifying key areas of interest or advantage. You'd agree that it's natural for first-time investors to make lots of mistakes. However, if there's someone to hold you by the hand, you'll avoid such mistakes and begin your investment journey with a much better head start. You see, while markets have undoubtedly become more efficient with more money going round, they can also become inefficient again afterwards. So Klarman, a genius investor worth over $1.5 billion, believes we can still find an edge even in today's markets. You just need to have the right focus and mentality. That being said, let's head over to the next important thing: the power of time arbitrage. One of Klarman's key strategy is something he calls time arbitrage. Here's how it works. Big-time investment companies, aka Wall Street and professional money managers, are obsessed with short-term performance. Their bonuses, their job security, everything depends on driving returns quarter to quarter. As individual investors, however, we don't have to worry about this. Instead, we can afford to take a long-term, multi-year investment perspective. This difference in time horizons gives us a major advantage according to Klarman. And note that this strategy is also what Warren Buffett recommends.
Stocks are safe for the long run, and they're very unsafe for tomorrow. Berkshire, 3 times since I took over, has gone down roughly 50%. Did I feel poor then? No, not at all. I knew it was going to be worth more over time. American business is going to be worth more over time. That's what you're buying as a business. You're not buying a stock. You're buying a piece of a whole bunch of businesses. Are those businesses going to be worth more 10 or 20 or 30 years from now? Of course they are. But if you think you can jump in and out, or that you know the time to come in, I think you're making a mistake.
While Wall Street frantically buys and sells on short-term news, we are advised to remain patient and wait for mispricing. When stocks fall out of favor and get cheap, we can swoop in and buy at a discount. Klarman went on to buttress this point by giving a case study using stocks of the popular company Meta. Case study, Meta. Meta, which was formerly known as Facebook, is one of the companies with the most incredible stock performance in recent years. Meta's stock skyrocketed soon after its initial public offering in 2012, raising over 20 times to $375 per share by 2021. Statistics as of 2023 show that over 3 billion people use Facebook alone, not counting the other social networks under Meta, Instagram and WhatsApp. So it's easy to see how the company has been printing money with its widely popular social media platforms. But in late 2021, the stock came crashing down, falling nearly 80% to around $90 per share in the next few months. Immediately, top investment companies began frowning at Meta stocks. But why did Wall Street dump them so quickly? Well, there are two reasons. First, Meta began spending heavily on its metaverse pivot, hurting earnings. And second, TikTok emerged as a serious competition. Wall Street freaked out and sold hard, tanking the stock. But for long-term investors, this was a gift. The core business fundamentals hadn't changed. Meta remained hugely profitable. Klarman emphasized ignoring the short-term noise and focusing on the business. Those who bought Meta during the panic have been richly rewarded, with shares raising 3 times off their lows since the 2021 crash. This is time arbitrage at work. And so, always remember that investing is a long game, not a short sprint. Focusing on what truly matters.
One of the things that's really important, there's an enormous amount of fire hose of information coming at all of us all the time. And as an investor, I've learned to try to be focused on things that actually are going to move the needle for me and my portfolio.
With today's 24/7 news cycle, investors face endless streams of information. It can be paralyzing. How do we decide what's important? This is where Klarman's important and knowledgeable principles come in. When analyzing an investment, we should ask ourselves, is this information important? As in, will it significantly impact the investment's long-term success? Or is the information simply knowable, something that you could just bear in mind but not necessarily act upon? Let's walk through some examples Klarman gave. A company's financial health is both important and knowable. You should analyze the balance sheet and cash flows to know your current financial standings. The future prospects of the industry, somewhat important and knowable. You can analyze trends and growth projections. Management quality, important and fairly knowable by looking at capital allocation history. Future interest rates, important but not knowable. Rates are anyone's guess. The economy, important but also not very knowable. It's hard to predict it reliably. This filter helps cut out all the noise and distill down to what really moves the needle for an investment. We want to focus our time on assessing things we can analyze with some confidence. Crypto analysis. You'd agree that cryptocurrency is one investment asset that swept the world by storm. With Bitcoin bringing more than 1,000% returns for earliest investors, it's easy to see how first-time investors can be easily swooned by crypto. But what are Klarman's thoughts on crypto assets? Well, Klarman provided thoughtful insights into crypto and its concept. He believes that while crypto prices could certainly rise, their inherent value is highly imponderable. After studying it extensively, Klarman says he still can't find a solid value thesis. So instead of making absolute predictions about whether crypto will go down or up, he focuses his time elsewhere. There are better opportunities to understand. You see, as an investor, you have limited time. It's best to focus on businesses where you have an edge rather than trying to predict highly uncertain things like crypto. In a nutshell, Klarman is not a fan of crypto. And guess what? He's not alone. Warren Buffett also shares this exact same view as Klarman. Here's how Warren said it in an interview.
In terms of cryptocurrencies generally, I can say almost with certainty that they will come to a bad ending. Now, when it happens or how or anything else, I don't know. But I know this, if I could buy long-term puts, if I could buy a 5-year put on every one of the cryptocurrencies, I'd be glad to do it, but I would never short a dime's worth.
Have you thought about trading the futures to take a negative position on Bitcoin?
No. There's no reason. I get into enough trouble with things I think I know something about. Why in the world should I take a long or short position in something I don't know anything about? So, we don't have to know what cocoa beans are going to do or cryptocurrencies. We just have to focus on 8 or 10 stocks, that businesses basically that we think are decent businesses.
Now, we've seen a major part of Klarman's investment secrets. Now, let's do a recap of the important points and tie this all together. First, always remember that opportunities exist for investors like you and me, regardless of the behavior of the markets. Secondly, always follow the long-term, value-focused approach to investments. Kill the urge for short-term gain and learn to wait patiently for mispricing. Thirdly, focus on investment factors that are important and knowable. Don't get distracted by endless noise. Also, focus on the dimensions or pockets of the market where you have an edge. Lastly, find a mentor and always play the game with the right mentality and professionalism, keeping emotions aside. If you can keep these 5 things as revealed by Klarman, you'll soon find yourself generating market-crushing returns in no time. The time-tested wisdom of the great investor Seth Klarman, with his 30-year track record, speaks for itself. Surely no one is saying it's going to be an easy road, but at least now you have what it takes to weather the storm. I hope you found this breakdown helpful. Let me know what investment insights resonated with you the most in the comments. If you haven't already, be sure to subscribe for more content like this. Thanks for watching, and happy investing.